Good evening, everyone. Welcome to the channel. Today I am going to talk about CG Services Interim Report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. Country Garden Services Holdings Company Limited provides a wide range of businesses and services to property owners, residents, and developers in mainland China. The company operates through four main segments: property management, three supplies and property management businesses, city services business, and commercial operational services business. The company's services include security, cleaning, landscaping, gardening, repair and maintenance, community value-added services such as home living, decoration, real estate brokerage, community media, local life, area management, insurance brokerage, and sales of goods management consultancy services for property developers, sales and leasing agency services for unsold parking spaces and properties, heat supply, city, and commercial operational services, elevator installation, supporting, and other services, information system integration, skill training, science and technology promotion, advertising, and e-commerce services. These services cater to various types of properties, including residential, commercial, office buildings, industrial parks, multi-purpose complexes, government buildings, hospitals, schools, airport terminals, highway service stations, scenic areas, and more. The significant increase in Country Garden Services Holdings stock price over the past year can be attributed to a combination of factors. Improved financial results, including a notable increase in net income and basic earnings per share, have contributed to the appreciation. The company's business restructuring efforts, led by Goldman Sachs, have also played a crucial role. By exiting lower-performing contracts and focusing on core operations, Country Garden Services Holdings has been able to improve its collection rates and enhance operational efficiency. Analyst upgrades and positive outlooks have further boosted investor confidence. Goldman Sachs raised the company's stock rating from sell to neutral, citing the successful business restructuring efforts. Analysts forecast annual earnings growth of 17.2% and revenue growth of 2.5%, providing a solid foundation for future growth. The company's share buybacks, including a notable instance in September 2025, have also contributed to the stock price increase. Overall, Country Garden Services Holdings' improved financial performance, strategic business restructuring, enhanced operational efficiency, and positive analyst revisions have all contributed to its significant stock price appreciation over the past year. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by the expansion of core property management segment, market expansion, and growth in new energy business. The company has also seen significant increases in revenue from community value-added services, three supplies and property management business, liquor products, retail, and new energy businesses. On the other hand, revenue decline can be attributed to a decrease in value-added services to non-property owners, city services, prepaid business management revenue, preliminary investments for expansion of three supplies and property management, business, and year-on-year decrease in net profit. Net income and profit margins experienced significant changes in the given period. Net income decreased by Rm 154.3 million, but more notably, it also saw a substantial drop of Rm 705.8 million. This indicates a considerable decline in overall profitability. Profit margins underwent various shifts across different business segments. The overall gross profit margin declined by 2.7 percentage points to approximately 18.5%. However, value-added services showed an improvement with a 6.6 percentage point increase. In contrast, property management services and community value-added services experienced decreases of 1.1 and 8.6 percentage points respectively. The three supplies and property management business saw a decline in property management by 1.8 percentage points, while city services decreased by 3.4 percentage points. Commercial operational services also witnessed a drop of 5.1 percentage points. These changes suggest that certain segments struggled with profitability, contributing to the overall decrease in net income and profit margins. The company's financial performance indicates a concerning trend of generating negative operating cash flow. This suggests that the business is struggling to produce sufficient revenue to cover its operational expenses, resulting in a net outflow of cash from core operations. As confirmed on page 8 and page 61, this issue warrants attention and potential adjustments to ensure long-term sustainability. The company's debt level has remained relatively stable over the past year, with a slight decrease from RMB 32,175,809 to RMB 32,117,830. However, this reduction is largely due to a decrease in total bank and other borrowings of RMB 12,091. Meanwhile, interest expenses have increased, but not significantly, as the change in interest rates has been minimal, from 4.25% to 4.21%. Overall, while there are some minor fluctuations, the company's debt level and interest expenses have remained relatively stable. The company's performance varied across different segments and regions. The commercial and property city operational services business stood out as a strong performer, with revenue growth and increased segment results. In contrast, the three business segments saw its segment results decrease significantly, although it was offset by other poorly performing segments. Additionally, the property management and related services segment also experienced a decline in segment results. However, the city operational services business reported relatively stable revenue but decreased segment results. Management is emphasizing a strategic shift towards quality improvement and efficiency over scale expansion. Key initiatives include investing in digital transformation, prioritizing sustainable development, and focusing on long-term growth and competitiveness. The company will also withdraw from loss-making projects and explore new marketing models to optimize business structure and resource utilization. Additionally, management plans to expand the three supplies and property management business, which is expected to increase trade receivables. The company's financial summary reveals that it has engaged in two key shareholder return initiatives. Firstly, the company has a history of paying dividends to its shareholders, as evidenced by references on pages 25, 44, and 54. Secondly, the company has also bought back shares from the market, with further details available on page 47. There are currently no concerns regarding inventory buildup or supply chain disruption, as indicated in the financial summary. This suggests that current stock levels and logistical arrangements are sufficient to meet demand without causing disruptions or overstocking issues. That concludes the financial summary for CG Services. Feel free to comment below, and I will be happy to answer them when possible.